In today's show, we'll be discussing the biggest ever monthly Bitcoin price drop, as well as 5 gyrations to watch in the Bitcoin market this week. And as analyst William Clemente points out, long-term hodlers are stacking through the dip. He also shares they've now added 238,000 BTC to their holdings since April. And as Plan B points out, in the chart, you see what price level each of the total 18.7 million Bitcoin was last move. So what happened in May? Weak hands sold 1 million BTC in May at 30 to 35,000, which they bought in April at 55 to 60,000, a staggering $20 billion loss. The good news, these 1 million Bitcoin are now in strong hands. That's right. Also in today's show, Vitalik Buterin on why Elon Musk's plan for scaling crypto 10x is fundamentally flawed. Responding to Elon's tweet, ideally Doge speeds up block time 10x, increases block size 10x, and drops fee 100x. Then it wins, hands down. And Vitalik responded in a blog post, for a blockchain to be decentralized is crucially important for regular users to be able to run a node and have a culture where running nodes is a common activity. And Elon, the puppet troll himself, responded, he fears the Doge. And while we're speaking about Elon Musk, quoting Max Kaiser from the most recent episode of the Orange Pill podcast, Elon Musk is associated with the aristocratic classes because almost the entirety of his fortune is tied to government-issued carbon credits. So he's tied in with the government closely. He's not doing stuff that would be completely independent of the government. Also in today's show, breaking news, the NYDIG CEO says we'll see an explosion in Bitcoin-driven financial innovation in the banking and insurance sector over the next year. That's right, Ross Stevens also revealed that he had a meeting with the heads of 3 of the world's largest central banks about Bitcoin and inflation. He believes that we could see a central bank adopting the Bitcoin standard or purchasing Bitcoin as a reserve asset in the next 12 months. I'll be breaking this down for you. We'll also be taking a look at the overall crypto market. As you can see, Bitcoin, Ethereum, and most of the major altcoins are back in the green. But where's the Bitcoin price likely to go next? Find out all this, plus so much more in today's show. Here at Crypto News Alerts, I drop a brand new episode every single day, so be sure to smash that subscribe button. That's right, and turn on all notifications to receive daily premium Crypto News Alerts every single day, just like this. And before I kick off today's show, today's episode is brought to you by our sponsor, BlockFi, the leading provider of financial products and services for crypto investors. Here's where you can put your crypto to work. They're currently paying out a 5% annual percentage yield on Bitcoin and a 10% APY on stable coins, and they are backed by the biggest names in the industry, including Winklevoss, Fidelity, Morgan Creek, and Coinbase. And they have a special promo running right now where you can receive up to a $250 crypto bonus with a deposit of $100 or more. All you need to do is click my referral link in the description right down below. It'll take you here. Then click this yellow button that says sign up, and you'll notice the referral code already pre-populated for you to take advantage of this special bonus. So what are you waiting for? Click the link right down below and let's start stacking those sats, yo. All right, welcome back to another episode of Crypto News Alerts. I'm your host, JV. It feels good to see the entire crypto market back in the green. We got a lot to cover, so let's dive right in. Bitcoin's currently circling above $36,000 to start the week afresh after hitting 30,000 in a capitulation bottom event. A rebound to 42,000 had many thinking that the worst was over for Bitcoin, but the weekend proved them wrong. Now let's talk about the 5 things to watch out for in the crypto market this week. From weak hands to strong throughout the May sell-off, one process has reappeared over and over, and that's new coins flow into old hands. In other words, those coins which moved at higher prices near the 64,500 all-time highs have moved again at much lower prices. Their destination, via exchanges or otherwise, seems to have been large volume investors, better known as whales or wallets, with little history of selling. Checking out these tweets from analyst William Clemente, long-term hodlers are stacking through the dip. He also tweeted they've now added 238,157 Bitcoin to their holdings since April, as you can see right here, brought to you by Glassnode Analytics. The phenomenon has been seen before during previous price dips, but the scale of the transfers this time has grabbed analysts' attention. It was noticed by Plan B, creator of the stock-to-flow Bitcoin price models, who argued that whales are now taking maximum advantage of new investors' cold feet. He uploaded a chart showing at what price each single Bitcoin moved for April and May 2021. Trading habits are clear, as he shared right here on Twitter. In the chart, you see what price level each of the total 18.7 million Bitcoin was last move. So what happened in May? Weak hands sold 1 million Bitcoin in May at 30 to 35,000, which they bought in April at 55 to 60,000, a staggering $20 billion loss. The good news, these 1 million Bitcoin are now in strong hands. That's right. And he also recently tweeted, I see my Bitcoin investment as a call option. I will either write it to $0 or $1 million plus and size my initial position accordingly. I am less interested in 100 to 288,000, but focused on 2024 halving and beyond. I don't care about volatility. Asymmetric return is key. 0 versus $1 million. Let me know if you agree or disagree with Plan B. And I like to point out that his Stock to Flow X model predicts a $288,000 Bitcoin price before the end of this year. And checking out the responses, so no 288,000 this year, and Plan B responded, I do think we will hit 288,000 this year. No guarantee, no investment advice. Of course, I can be wrong, but Stock to Flow X is intact and indeed pointing to those price levels. So there you have it. So yeah, the panic selling appeared to be a little match even for whales' own clout. As Cointelegraph reported, large clusters of buy-ins between 50 and 60,000 were wiped out with ease as the market fell, this continuing all the way down to 30,000. He also tweeted right here, for Bitcoin veterans, it is indeed unbelievable and embarrassing, but for noobs, this volatility can be too much. We all know the kind of people that sold in May. Look around you. These are always the same people. That's right. A lot of retail investors got scared and panicked, and they just transferred their Bitcoin to people like Michael Saylor. It is what it is. And with that being said, it comes as no surprise that the Crypto Greed and Fear Index shows we're currently a 10 in extreme fear, which is low as we've seen it in a very, very long time. That's because many retail investors are currently extremely cautious and skeptical of cryptocurrency. The more fearful, the better the time to buy, says Steve Courtney, the CEO and founder of education resource Crypto Crew University. And checking out this tweet from the Wolf of Wall Streets, he says, I am holding the most Bitcoin I have ever had by far. So there you have it. Now for the next factor to keep your eyes out on this week is record monthly gyration for Bitcoin. At this time, Bitcoin's hovering just above $36,000, up 1.5% versus Sunday, but 20% lower than the same time a week ago. Traders' patience is being tested. You can say that again. The initial $30,000 episode resulted in a rebound to 42,000, the site of February's all-time highs, but this failed to hold for long. Instead, Bitcoin dipped back into the $30,000 corridor after mainstream media panic over comments from China over mining and crypto-based commerce. These levels have endured as mainstream consumers are fed with more and more alleged risk factors. In my opinion, it's nothing more than FUD, and this is nothing new. It's the same stories that were repeated last cycle 4 years ago. Check this out. While you're concerned with FUD, Bitcoin simply continues to work as intended, securely producing block after block like clockwork, following a deterministic supply schedule controlled by no one, unstoppable since more than a decade. Raphael Schultz-Kraft, the co-founder and CTO of analytics service Glassnode, countered on Monday, never lose sight of this. Amid the noise, sage advice. That noise remains especially audible from the mainstream publications, as you can see, just filled with FUD right now, fear, uncertainty, and doubt. And unfortunately, that's scaring all the retail investors out of their positions, and they're capitulating to the stronger hands. Schultz-Kraft's words, meanwhile, echo the feelings of well-known crypto names. And while super bullish short-term price forecasts are currently few and far between, there are similarly no doubts about the overall trajectory. We all know we're heading to the moon. We're still in this bull market, about to experience the second leg up, so strap in your seatbelts and get ready for liftoff. Nonetheless, as Capriole Investments founder Charles Edwards notes, Bitcoin is currently on track to log the biggest monthly red candle in its history. As you can see here on your screen, it shows you the Bitcoin 1 month candle chart. Now the next factor to keep your eyes out on this week, stock to flow stays intact. That's right, few long-term indicators provide such a calming view for Bitcoin like stock to flow. Throughout the volatility this month, and indeed throughout all periods of volatile price action, stock to flow has remained the go-to resource for those seeking proof that it's all business as usual for the king of all crypto. As its creator Plan B underlined in recent days, this time is no different. Even its correction of more than 50% versus all-time highs did not make Bitcoin violate stock to flow predictions. Actual Bitcoin price is at the lower bound of the stock to flow model. Am I worried? No, he summarized on Sunday alongside data from the model. Plan B explained that in essence, Bitcoin has room to range approximately 50% around the all-time high in either direction and still conform to expectations. It is not okay if we stay at 32,000 for multiple months, but I expect Bitcoin price to bounce back in the next days/weeks. He added, that would even permit a record monthly downwick and preserve the bull market. And as Cointelegraph reported, depending on the stock to flow model used, the current 4-year halving cycle calls for an average Bitcoin price of at least $100,000, and so far, it's never been disproven. That's right, stock to flow model has been the most accurate Bitcoin price prediction model in history, and stock to flow X predicts a $288,000 Bitcoin price before the end of this year. Now the next factor to keep your eyes eyes out on in the Bitcoin market this week is mining set up for a major shakeup. The old adage, price follows hash rate, may need some extra time to prove itself to hopeful bulls. This week, the Bitcoin network fundamentals are still making sense of recent events, and their impact on miners appears to be more widespread than initially thought. According to data from various resources, including mining pool stats, the Bitcoin hash rate currently measures 136.7 exahashes per second, around 30 exahashes per second below the all-time highs. Other estimates put the hash rate at more than 10 exahashes per second higher, but a precise figure is ultimately impossible to attain. Bitcoin's next automated difficulty readjustment is due in 6 days' time. Will meanwhile open up mining to more potential hashing power, incentivizing miners to come on board. This may be sorely needed as talk has turned to miners selling Bitcoin en masse in recent days. I've effectively been able to confirm this. Miner selling is a huge driver of price action here. Make of that what you will. Nick Carter, co-founder of data resource Coinmetrics, said in a series of tweets. Carter touched on the China narrative and forecast that mining operations would indeed end up being redistributed more evenly, but that this would come with a temporary price. Everything I'm seeing indicates an absolute seismic shift of hash power out of China into the world at large. He continued, quoting him here, "It won't be elegant or pretty, but obviously it's great for the hash rate distribution and likely carbon intensity." All right, and before I break down our next story of the day, Vitalik Buterin says why Elon Musk's plan for scaling crypto 10x is fundamentally flawed, as well as the NYDIG CEO says we'll see an explosion in Bitcoin-driven financial innovation in the banking and insurance sector over the next year. But first, let's take a quick look at the overall crypto market. We can see Bitcoin recovering nicely, up 5% for the day, now trading above $37,200. We have Ethereum up 8.6%, trading above $2,300. We have Chainlink up 22%, trading just under $24. Cardano up 16%, trading at $1.47. Binance Coin up 16%, trading at $302. And XRP up about 10%, trading just above 86 cents. All right, now let's break down our next story of the day. Ethereum co-founder Vitalik Buterin has posted a lengthy paper on the limits to blockchain scalability, criticizing claims made by Tesla's CEO Elon Musk. The article, published to Buterin's personal blog on May 23rd, emphasizes the trade-off between decentralization and scalability in architecting blockchain networks. The article comes in response to Elon Musk's May 15 tweet, asserting that Dogecoin will emerge as the leading chain if it moves to increase its block size by 900%. Checking out this original tweet from Elon Musk back on May 15th, ideally, Doge speeds up block time 10x, increases block size 10x, and drops fee 100x. Then it wins. Hands down. And Elon actually responded to this tweet. Elon is choosing Doge because Dogecoin is better than Bitcoin in many fundamental ways. Dogecoin has faster transaction speeds, lower fees, and less environmental impact than Bitcoin. Doge is affordable for regular folks because of its high supply. People's crypto, and he's quoting Elon Musk right here. Now, we all know this is nothing more than shenanigans and FUD at the end of the day. Vitalik challenges Elon's proposition, emphasizing the challenge is seeking to achieve a sharp increase in scalability and throughput without leading to extreme centralization and compromising the fundamental properties that make a blockchain what it is. Buterin stressed the need for decentralization to eliminate the risk of a network having a single point of failure and the protections of a widely distributed network enjoys against coordinated attacks. He added that decentralization cannot be achieved without regular users being freely able to run nodes. Quoting Vitalik from this blog post, "For a blockchain to be decentralized, it's crucially important for regular users to be able to run a node and to have a culture where running nodes is a common activity." Buterin also asserts that sharding can facilitate comparable scalability to that offered by many centralized chains. Based on the current state of the Ethereum network, Buterin predicts that a sharded Ethereum could probably process 1 million transactions per second with the full security of a blockchain, but it's going to take work to do this without sacrificing the decentralization that makes blockchains so valuable. And back in March, the Ethereum co-founder suggested that rollups will be deployed on Ethereum before sharding ships with Ethereum 2.0. Now, this article was just published earlier today, and Elon, being the puppet troll that he is, he wrote, he fears the Doge. Go figure. And before I share with you how I really feel about the Elon troll and puppet, as well as NYDIG CEO says we'll see an explosion in Bitcoin-driven financial innovation in the banking and insurance sector over the next year. But first, let's take a quick look at the overall crypto market cap, now back above $1.5 trillion with $237 billion in volume in the past 24 hours, and current Bitcoin dominance at 45.2%, with the Ethereum dominance at 17.4%, and the current Bitcoin market cap just above $682 billion, with the Ethereum Ethereum market cap just above $262 billion. Now checking out the top gainers within the top 100, we have Matic up 56%, trading at $1.47. Maker up 50%, trading at $3,379. Helium up 41%, trading at $14. Phantom up 40%, trading at 30 cents. And Thorchain up 36%, trading at $9.45. Now quoting Max Kaiser from the most recent episode of the Orange Pill podcast. If you missed it, be sure to check it out. It's really good. He wrote, Elon is associated with the aristocratic classes because almost the entirety of his fortune is tied to government-issued carbon credits. So he's tied in with the government closely. He's not doing stuff that would be completely independent of the government. He's actually a government apparatchik. He exists entirely on carbon credits. He got the tap on the shoulder, and he's been tasked with trying to go after Bitcoin. You got Janet Yellen, you got Jay Powell, you got central bankers, you got the IMF, you got Christine Lagarde. You got a lot of folks that are attacking Bitcoin now because they, of course, understand it's a threat to them. And I think that Elon got the tap on the shoulder as well. I think the NBC Saturday Night Live performance is a part of that to essentially create a mythological creature that can be used as propaganda, and he's being used as a propaganda tool. I agree with Max Kaiser 100%. If you haven't watched this episode of the Orange Pill podcast, check it out. It's entitled Debunking the Bitcoin Energy FUD, and it's really good. And before I break down our final story of the day, breaking news, the NYDIG CEO says we'll see an explosion in Bitcoin-driven financial innovation and in the banking and insurance sector over the next year. But first, I want to remind you to smash that show more button right below this video in the description for a detailed analysis of what's going on in the crypto market. This goes for all 790 plus videos right here on my YouTube channel. Also have some very helpful resources for you to plug into, including my daily letter, which goes out to over 30,000 subscribers every single day. To subscribe, visit letter.cryptonewsalerts.net. Also have a blog I update daily, which could be found at cryptonewsjest.com. Also be sure to smash that subscribe button. That's right, turn on all notifications to receive daily premium crypto news alerts every single day just like this. You can also find me on all the major podcasting platforms, from Spotify, the home of the Joe Rogan Experience, to Apple's iTunes. You can also follow me on Twitter. My Twitter handle is Crypto News Yes. And for those of you on Facebook, I do have a private crypto Facebook group entitled Crypto Alchemy. To join it, click this link, request to join. I'll be sure to plug you in. Also have a private crypto Telegram chat, which is uncensored. To join it, click this link. You automatically be added, and I'm looking forward to connecting with you personally on the inside. And for those of you on TikTok, be sure to follow me there. All right, now let's break down our final story of the day. NYDIG CEO Ross Stevens revealed that he had a meeting with the heads of 3 of the world's largest central banks about Bitcoin and inflation. He believes that we could see a central bank adopting the Bitcoin standard or purchasing Bitcoin as a reserve asset in the next 12 months. This was actually one of the recent predictions from Max Kaiser, so kudos to Max if this comes true. Bitcoin is life insurance, is how Ross Stevens, founder and CEO of NYDIG, a Bitcoin management company, which is a subsidiary of a $10 billion asset manager Stone Ridge, defined the cryptocurrency in his latest interview. Bitcoin, according to him, is a payout in the form of freedom and dignity. And when one is poor, all they have is fiat. And that's a melting ice cube of value as the Federal Reserve continues to print money. And this has been through the thoughts of exasperation of wealth inequality, profound unfairness of central bank activities, that Stevens saw an awesome power of Bitcoin. NYDIG bought a bunch of Bitcoin way back when no one knew about it and held it all the way through. But in 2020, they bought more Bitcoin than the previous 5 years combined and are on a pace to buy even more this year. That's right. This is because the company sees Bitcoin as a peaceful weapon of choice against central bank driven time theft. Very powerful words, especially coming from NYDIG. The firm basically went all in 2017 and had profound effects on our company, says Stevens, adding, if you think about the denominator of fiat money just never ending and expanding, that means necessarily that Bitcoin gets more and more valuable. He's right, Bitcoin is the first store of value in human history whose supply is completely impervious to any amount of increased demand. He shared, that's right, because cash is no longer an asset, but a liability, as we have been since last year. Ever since the Fed implemented ultra-loose monetary policy, the value of the currency took a hit, propelling companies to see Bitcoin as a treasury asset, a replacement to the cash. Cash is no longer an asset, it's a liability, says Stevens, and as such, companies have to decide what to do with their reserves. For companies like Stone Ridge and others that have adopted the Bitcoin standard versus companies in their industries that have not, the results are profound. And part of the key is a shift in mindset, which is that Bitcoin is not vulnerable like fiat and not subject to the whims of human frailties like decision making. He added, this means if you're not long Bitcoin, you are short Bitcoin, which is not going away. We're at a time of great transition. What you will see over the next 12 to 24 months is nothing short of an explosion in Bitcoin-driven financial innovation in the banking sector as well as the insurance sector. The problem is that people don't feel safe with trusting disrupting their financial solution, and NYDIG is partnering with them to solve this. And the beginning of the baby steps of a rollout would be seen in Q4 with 2022 as the year of the bank after bank after bank, enabling their customers to buy Bitcoin, get Bitcoin rewards on credit cards, and receive interest in it as well. As for fear and opposition from central banks on Bitcoin, Stevens reveals that he is meeting with the top officials who want to understand this asset class. We're at a time of great transition, he said. Stevens didn't share the name of the officials, but said that they had a 4-hour-long discussion. Quoting him here, this past Saturday, the heads of 3 of the largest central banks in the world wanted to talk about inflation and Bitcoin with me. But one topic he thinks about is when a country will change their legal tender laws to adopt the Bitcoin standard, or a central bank would purchase Bitcoin as a reserve asset. According to him, there is a 50-50 chance this would happen, and his contemplation is that will happen in the next 12 months. Let me know if you agree or disagree with the CEO of NYDIG, because if this was to come true, this is massively bullish for Bitcoin and for the entire crypto market. Now for a quick recap, what I covered with you right here in today's show: the biggest ever monthly Bitcoin price drop. I shared with you 5 gyrations to watch out for in the Bitcoin market this week. Also shared the latest from Vitalik on why Elon Musk's plan for scaling crypto 10x is fundamentally flawed. Also shared this breaking news that the NYDIG CEO says we'll see an explosion in Bitcoin-driven financial innovation in the banking and insurance sector over the next year. So where do you feel the Bitcoin price is likely to go next? Let me know in the comments right down below. Well, that's going to conclude today's show. As always, I appreciate you tuning in and journeying along with me inside this incredible crypto matrix. If you gain value out of today's show, be sure to smash that subscribe button. That's right, and turn on all notifications to receive daily premium crypto news alerts every single day, just like this.